Okay, welcome to another edition of our ongoing MMI webinar series. We are pleased to partner with our friends at Vestmark, one of MMI's 2023 Cobalt partners, for this webinar, which is going to look at an area of tremendous focus and activity within our industry, and that is ways that firms can deliver personalized portfolios and tax management at scale to individual investors. Today, you're going to hear a conversation among 3 firms that have implemented these types of solutions to strengthen their existing businesses and stand out from the competition. So we have a real all-star lineup of speakers for you, and thanks to them and to the Vestmark team for pulling all of this together. We hope to deliver key takeaways for both asset managers and wealth managers on this important topic. 2 very quick housekeeping items before we begin. First, you can customize your screen view today by simply resizing or dragging around any of the windows you see on the control panel. And secondly, this is important, we will be reserving time at the end of the hour for questions. So please use the Q&A widget that you see on the screen. As we go along, you can submit questions for our speakers, and we'll get to just as many of those as we can. All right, so now let's get going. I've been looking forward to this conversation, as I know many of you have. And let me introduce our leader for today's discussion, Rob Battista, who is the head of advisory solutions at Vestmark. So Rob, please take it away.
Thank you, Joan. Thank you to MMI as well for giving us the platform to discuss such a great topic. We have, as Joan said, a very impressive group on the panel today, all looking at trends and personalization through a slightly different lens. We intend to have a very open and candid conversation on a variety of topics. We hope that everyone who is taking time away from their busy days leaves with some valuable takeaways today. But before we get started, let's go around and do some quick introductions from our panelists. We have Patrick Mullins, SMA Growth Leadership from Invesco, Gavin Rahm, SVP and Head of Fixed Income SMA Solutions at AllianceBernstein, and Russ Tipper, General Partner, Investment Advisory at Edward Jones. To give the audience a little bit of context, we'll go around and give each of them 20 seconds to just give a quick overview of your role. Pat, let's start with you.
Hey, thanks, Rob. Great to be here. Pat Mullins, I actually, my formal title is Head of SMA Specialist, leading a team of forward-facing folks in the field, helping advisors and clients with SMA solutions. We've got $18.5 billion in AUM in SMAs. And again, great to be here.
Perfect. Thank you. Gavin?
Hey, everyone. Good afternoon. Appreciate you taking the time to be on the webinar today. My name's Gavin Rahm. I'm actually now head of SMA at AllianceBernstein. Spent the past 10 years in fixed income in a portfolio management capacity, but our firm has been managing it. We run about 60 or 70,000 separate accounts, and I'm now tasked with the growth and the vision of the separate account business, which entails personalization and tax management angles. So excited for the discussion today.
Thank you. And Russ.
Yeah, thanks so much again for having me. Russ Tipper. I'm with Edward Jones, new to the organization, but not new to this topic. I lead our investment advisory efforts, so it's the strategy, the program management, and the platform construction. This is a very important topic. It is what our clients are asking for, and excited to share what we are doing at Edward Jones to really capitalize on this opportunity for our clients.
Okay, great. Well, of course, thank you all for being here as well. I think we'd all agree that personalization has become a very hot topic in our industry. If you've attended a conference lately, you've certainly witnessed a sea of sponsor booths with a variety of unique ways to describe their approach to personalization. Everyone seems to have a slightly different definition of what they truly mean when building personalized or tailored solutions. So before we get into the meat of our discussion, let's take just a moment to talk about how we're defining personalization. Ross, I'll start with you. So while the trend initially appeared more broad in scope and also included a heavy focus on values and ESG, it seems that recently there's been more of a focus on tax management. So when you're building personalized solutions, what are the critical components for hitting the mark on personalization?
Yeah, Rob, a great question. And I think for us, our North Star is always going to be driven by, what is the need of the client. right? So I think as we as an organization and as an industry continue to tackle this topic, we find new and differentiated ways to solve it. ESG was one of the first ways around how do I personalize an SMA and remove objectionable securities and get more towards making more of an impact. Tax clearly is something that is incredibly important to clients, knowing it is one of the main friction points around why they may not adopt the advice and guidance that their financial advisor is delivering. But it's only the tip of the spear, right? We all are different. We all have different experiences from investing. So to me, we want to just offer as much choice and flexibility, whether that be biases around how you're managing, like active versus passive, other biases around experiences around vehicles, even biases and experiences around asset managers that you've worked with successfully. It's always difficult to say to a client, hey, good news, you've done a great job growing your portfolio. I'm recommending something different, and we need to get rid of everything that you've done historically, right? How do we build around some of those kind of core positions that are unique and exciting for the client? And as you can imagine, if you're driven all by what the client needs, this is a very long tail of different things we can do. Income optimization, things like that around things that are truly personalized and unique. So I think firms really want to deliver, consistency and advice and guidance, but like Snowflake, they all need to be individually personalized and customized based on what's most important to that client and how they are entering into that relationship and the portfolio they had coming in.
Yeah, Gavin, I'll turn to you real quick from the asset manager's perspective. I mean, we had all these years of buzz around ESG, right? Everybody was racing to build their empire of ESG products, and the AUM never really came in. So, do you believe the focus is primarily on tax management, and why is there more staying power with this type of personalization than we saw with ESG?
Yeah, look, it's a great.
Oh, sorry, go ahead.
Yeah, no, thanks. So, look, I think personalization means a lot of different things to a lot of different people, but when it comes down to it, my experience in managing muni bond portfolios is taxes is really front and center when it comes to their experience in an SMA non-commingled vehicle. So when you think about the evolution of wrappers in the investment management industry, you had mutual funds and the continuation on to more tax-efficient ETFs for a variety of reasons. But both of those are packaged products that can't necessarily be customized to each individual investor. And I think where you see the demand today, or where we see the demand as an asset manager, is really on the tax side. And part of that is the idea behind personally managing a portfolio to a client's tax lots. And the other part of that is what asset classes can you access tax management. And I think historically fixed income's been an arena where it was harder to get personalized tax advice and tax management. And now with the advent of new technology and the ability to use optimization protocols within fixed income, AB has been really innovative in the ability to deliver some pretty extensive tax benefits as a source of personalization or a personalized return stream for each client that comes in the door.
Great. Pat, I want to make sure we hit you on this one as well. From your perspective, do you agree it's on tax management is what the focus is? And I'll also, kind of follow up to that, the industry's kind of used direct indexing as a mechanism to deliver on that. But if you do believe it's tax management in focus, where is DI as a standalone missed the mark on personalization?
Yeah, thanks, Rob. I want to reiterate what Gavin was saying first and foremost. I mean, I think on the equity side, we've all heard the Pepsi versus Coke analogy, and you can realize a loss in Pepsi by Coke, move on with your day. I think that's something that a client can easily understand. But Gavin's right. As we look at tax management on the fixed income side, it's a little more complicated than that. You have to be able to have scalable systems in place to look at, if I'm going to sell a bond at a loss, I want to maintain the integrity of the strategy. I want to make sure that it's neutral or better on the risk duration yield spectrum. So we're adding complexity, and I know we're going to talk a little bit about scale and technology later on. But so I think it is focused on taxes. I think it is looking across asset allocation, looking at opportunities not just in S&P 500, but more broadly on the equity side, and then more sophisticated solutions on the fixed income side. And then to your other question, I think there's one of my biggest things that I was focused on is look before you leap. If you're going to sell something for a loss, you need to have a thoughtful process on what you're going to invest in, whether it's over that 30-day wash sale period, and make sure that the client stays invested if they want to stay invested. And I think just everyone's getting a lot more sophisticated on that side of the equation as well. Direct indexing definitely does the best job at looking at those alternatives, but I think we're getting a lot more sophisticated on the traditional active equity SMA side, and I think we're also, as an industry, getting better on the fixed income side as well.
Great. Yeah, I totally agree. It continues to evolve, and I think a lot of that is evolving along with the demand that we're hearing from investors, right? So it's certainly not a sudden shift in the industry, but again, it seems to be buzzing with headlines around these trends. So I'd also like to kind of address the question as to why now? Is it field of dreams concept of if you build it they will come, or are we really hearing this groundswell for more tailored solutions from clients? Certainly like to hear from each of you on that topic. Start with you, Russ. Has the demand for these services been driven by your advisors hearing it from clients? Is it them trying to get ahead of the game and have a stronger value proposition, or is it more home office driven that you guys are trying to get out ahead of it?
Yeah, I'd argue a lot of this is in being driven around having new abilities to deliver upon these kind of concepts. I think about even before the invention of cars and planes, people always wanted the world to be smaller. They wanted to make it easier to connect with people, right? That technology of going from not a faster horse but a car to get you to travel longer distance, or a plane to kind of get you going from one continent to the next, unlocked the ability to capitalize on that demand, but didn't create the demand in it itself. But I think our clients have always wanted greater personalization. I think financial advisors have always wanted to deliver greater personalization, but it was always really difficult and clunky to do, and best reserved for your highest net worth clients that had the biggest bang for the buck and one that you could spend the extra time in. I think as an industry and organization, with putting greater focus and adoption of technology, right, this concept of personalization can be delivered at much smaller kind of increments. I saw a question come in from the audience around kind of fractional shares. Like, fractional shares is not something that is needed to deliver personalization, but clearly it's going to add to kind of the democratization of personalization, knowing that certain vehicles like SMAs are going to be easier to offer different levels of personalization that you can't get through a packaged product. So instead of saying, hey, I'm going to offer levels of personalization only for those clients that can have a sleeve over $100,000 or a portfolio that is several $100,000, the ability to bring those things at a lower minimum is helpful. Now, I will say, let's make sure that the opportunity meets what the client needs, right? Theoretically, with fractional shares, you can bring personalization down to a very low minimum. But imagine a client that is not high net worth, is more kind of mass affluent. They've got a direct indexing strategy with hundreds of holdings, lots of turnover, right? A lot of complexity. Is that outcome better than maybe owning an S&P 500 ETF, right? Where they're not really looking for a portable tax alpha because they don't have the tax consequences, but now it's got a lot of complexity. I'll keep harping on this concept of, the client is the one who's really kind of driving this. The clients are becoming more educated, expecting more, and just happy that as an organization we're focusing on it. Now, you also mentioned direct indexing, and Pat hit it real quickly earlier. Direct indexing has been a great entryway to kind of help, again, democratize this concept of tax management. But again, where we can build upon it, which is not just an or but an and, where it's not just I have to make a passive preference in order to get taxes, where we can deliver that across different sleeves, deliver it more not just at a single sleeve level, but at a portfolio level. Clients don't say, hey, for large cap core, I want to be tax managed, but for every other part of my portfolio, I'm comfortable not doing that. They say, this is how I want to be treated, and how do we deliver that capabilities regardless of the securities they're using or the asset classes they're investing in. How do we leverage our combined capabilities from both a wealth platform and asset managers to fulfill on these promises that have long been awaited?
Yeah, Russ, just to chime in, I think the demand for tax managed solutions, I think we're really just at the tip of the iceberg. And the reason I believe that is our industry for many years, really for a long time, has been focused on gross of fee pre-tax returns. And as clients and advisors get access to better performance reporting that quantifies after-tax performance, I think their understanding of the benefits of personalized tax management can really be brought to light. So I think that's where these solutions are going to be in much higher demand in coming years as the reporting infrastructure at home offices, within wirehouses, within RIAs, maybe some of it's provided directly by the asset managers themselves, but there'll be solutions that come about to really highlight the tax benefits, particularly for high tax paying clients. And I think that's a big piece of it. The other piece you touched on is technology, right? The ability to actually deliver this at scale. We're at the beginning stages of that as well. I've been managing muni SMAs for a while now, and the way that we delivered tax management, I would say, in the 2010s was we would look at the portfolios manually in December, and we would arrange tax loss swaps on behalf of clients with dealers. That was a very time-consuming process. It was a very manual process, and it was a process that didn't necessarily respect the individual tax rates and tax lots of every client, but it was more based on an average back of the envelope analysis. So while still better than no tax management, I think the ability to target and provide this in a very sophisticated way with the advent of technology and algorithms that that asset managers are using in both fixed income and equity will show you that this industry continues to grow.
Yeah, absolutely. Pat, from your chair, any thoughts on the push-pull of the demand story? Or is it kind of coming from the ground up, or do you think it's more the technology enabling this for the first time?
Yeah, I think you can look at it through a lot of different lenses. A lot of our product development, there's another way of looking at it, which is more of the RIA dual contract channel versus the bank broker dealer on the single contracts. We get some of our best ideas solicited from RIAs that have more of an open architecture platform. They're letting us know what their clients need, and frankly, they're looking for different breadth and depth as an asset manager from us. They want us to be their strategic partner. They want to have some flexibility. They want to know what we think about certain personalization and customization. So that allows us to build out our platform with existing composites. Good ideas end up being baked into the solution set that then might be offered as a single contract solution somewhere else. So I think it's partially technology enabled, partially it's driven from the clients, and then we're getting a lot of insights from our RIA partners that then we can work with banks and broker dealers to say, yes, we have this capability. There's a composite track record. We're hearing it from client demand, and as those platforms evolve, we're well positioned to be able to have a composite, have proven capability in the space. Have the capacity to take on things. And I feel like platforms are evolving in this direction. So things like we got really good at tailoring around not necessarily taxes, but what about liability-driven investing and clients that have a big tax bill in March. So maybe they don't want us to reinvest that bond that's maturing in March. We can set that up systematically so we won't reinvest that. We know that that's earmarked to pay taxes. That's system enabled, but we see it mostly used on the RIA side. But then if a BD or a bank client wants that same capability, it's there and existing. So there's no one spot for new ideas, fresh ideas on the product development side. I just love that people are investing in the technology, that we're getting the word out on how powerful the SMA solution could be for client needs. And again, we want to be good partners when we're on a platform. We want to be good partners. We want to sell what's approved on the platform. We want to have good dialogue about capabilities that are there with home offices and folks like Russ. But we also do a lot of our incubation of new ideas on the RIA side.
Absolutely. Yeah, I mean, it's this marriage of the appetite for it as well as the capabilities to deliver it. one thing I'd definitely be curious to hear from all of you on as well is, we hear a lot about personalization as a sense of, a source of differentiation. And is that going to continue to evolve? Will that become table stakes, right? Or is there a period of time here where you can really set yourself apart by offering certain personalization components? Russ, I'll ask you first. Do you view the ability to customize the account level an opportunity to, kind of grab market share and have an edge versus your competitors, or are you starting to view that it's a requirement at this point?
Yeah, I'll answer. I think it is becoming, table stakes to do it at an account level, right? Obviously, clients don't think of themselves as a series of accounts. They think of themselves as, I'm trying to fund needs, wants, and wishes, and these are the pools of money that I'm trying to do it. So how do we expand and do it more at a relationship level, right, across those accounts, so that, if I am delivering a home office implementation, right, that's paired with a Repus PM sleeve, but I'm not doing things completely uncoordinated across them that generate kind of wash sales if we're focusing on taxes, or uncoordinated in terms of preferences. So at an account level, it's clearly a differentiator. Now, again, I think how do we keep getting better and better at the account level is going to be important and sources of innovation. But I do think we need to start moving things away from just trying to solve an account to doing it at an overall portfolio. We're making a lot of investments on both sides, clearly knowing that certain things like models is a great example, right? Models is an account level solution. It does align to a client's kind of diversified, goal. But models historically for most wealth managers has been dominated by qualified money. Why? Because it's a one-size-fits-most solution with not a lot of personalization. We're making a lot of investments to really get that to be around. A model is really characteristics that are best aligned to a goal, but it is not set in stone that this is the only way to kind of achieve that goal. So how can we help people, bring in assets, bring in those preferences, things that they've been so successfully accumulating money, either other firms or in their brokerage account, and build around those portfolios so you have very similar risk, like tracking error and exposures, but customize around what you do on our journey to doing true household level personalization.
Right, and it's one thing to add, the value of personalization, whether it's, tax alpha or things that meet their values, but also for your advisors, do you view it as an opportunity to grab more wallet share from clients because of these assets that are held away with embedded gains?
Yeah, obviously, opportunities to grab wallet share are going to be around things that, you can do that others can't do, or things that you can do that others can do, and now you're differentiating yourselves on other things like yourself, your service model, and where we're also putting a really big focus is on, planning, right? A lot of these things we're focused on is the implementation, not the actual plan itself and what the client's trying to do with the money. So I think advisors deeply understanding their clients' wants, needs, and wishes, and then having the ability to execute it in a very kind of seamless and coordinated way. Those are able to do that will help for a differentiated, not just investment experience, but overall client experience. And obviously clients are going to go where that engagement is, right? Like, people go in return because they've had an experience unique and differentiated from others. And that's what actually tells, clients how you gain referrals, because they're saying, this was unique and differentiated for me. You, my friend, should be looking to offer a similar experience that you might not be getting elsewhere.
Great. Gavin, what's your take on this? The ability to offer the personalization as a source of differentiation. Is there a period of time you have in mind where this is a true differentiator?
Yeah, hopefully my audio is better now. So look, I think in fixed income, things are a little bit different. I would say that we're 5 to 10 years behind the equity DI trend in terms of the technology, the liquidity, the trading processes, even the back office sort of elements to running an SMA. So, we've invested a lot in our tech stack and our ability to deliver bespoke tax management at scale. So I think that's an area that we've at AB continued to see a lot of differentiation and acknowledgement in the marketplace that what we do is different. At the same time, I think other asset managers are beginning to deliver capabilities that are similar, right? I think the investment on the fixed income side, because of the liquidity challenges, are enormous, right? The ability to trade bonds thoughtfully, realizing transaction costs to crystallize tax benefits is something that you want to be very, very careful about, right? You want to be thoughtful about what you trade and how much turnover you have within a fixed income portfolio and what it costs you to rebalance the portfolio to make sure that you are, in fact, enhancing the after-tax return profile for each individual client. So I think a lot of those tools are sort of proprietary to large asset management firms and have been used, I would say, historically to service large institutional clients. We've used those at AB for many years on the institutional side of our business. And I think now firms like ours are beginning to pivot and point those tools at SMAs at lower minimums, right? Minimums in fixed income still aren't as low as equity SMAs, given the minimum P sizes in bonds and the diversification needs. But I still think the accessibility of SMAs and the prevalence of tax benefits is growing. I still think there's a couple of years that our firm's investments are going to continue to differentiate ourselves and our benefits and the quantification of those. But my view is that the industry as a whole is not letting go of the idea of tax efficiency, and that high net worth investors that buy SMAs are going to continue to demand these types of quantified benefits in products when they buy non-commingled. So, this is something that in the next couple of years, you're going to see a need for new ways to differentiate, whether it's through differentiated active management or the way the portfolio manager implements the tax overlay. I think there's still areas where the active manager or the asset manager can shine, but it really needs to be in conjunction with tax efficiency.
Yeah, agree. And the differentiation is there, and I think we just see everybody looking for their unique solve for personalization. But I think one question that continually comes up, and one that we could probably dedicate an entire call to, is how do we anticipate that these solutions are going to be ultimately delivered? I'll go to you first on this one, Pat. So as the role of the asset manager evolves over time, what channels do you think that asset managers are in the best position to deliver on personalization for the long term?
Thanks, Rob. Yeah, first I just want to also have an opinion on, is this a fad on the tax management, or does it become democratized? I think having more choice and more ability to toggle around personalization brings us back to the core. I've known Russ for a long time. Myself, Gavin, everyone on the call, and our firms have realized a lot of success in this business because we get that we need to add value to both the client and the advisor relationship. It's a relationship business, and this just gives us more to help educate and to guide advisors to the best solution. So it's great to have tax-free and tax-aware, but for a California resident in the highest tax bracket, how do you compare and contrast those two alternatives? How can you tailor those to create something that is unique for that client? That's not going to go away. I think just having more choice still just reinforces the value proposition of having folks in the field to work with advisors and clients to come up with the best solution. So I think this is a long-term trend, and it may not be taxes, it may be something else, but the long-term trend is more choice means more guidance, more advice. As far as channelization opportunities, the way Invesco has really approached it, as I mentioned before, we really have at this point a matrix of capabilities and composites that we use. Not all of them are approved on any given platform. So the first challenge is from a distribution standpoint, making sure that our distribution partners understand each platform, what's available, what's not available. Can they pivot for a large opportunity? Can they pivot to a dual contract platform, or is that not allowed on the platform? So I think it's really just having a really disciplined, educated distribution team to be able to understand, whether it's the Edward Jones platform, understand what's available, what are the guidelines. If I have a big opportunity, is it permissible to go to the home office to talk about dual contract or not? That's one of the questions. And then I definitely feel like the wealth management platforms are in the best position to deal with things like wash sales, to deal with they're closer to the client, and I think they're closer to the closest to what their tax reporting is going to look like at the end of the year. So I really think to be effective there, it's a collaboration and it's a partnership with that home office. And then, as I mentioned earlier, on the RIA side, we're seeking deeper partnerships with RIAs that are more flexible, and they might be outsourcing more of that. Let's view it at the 1090, the 1040 level, the 1099 level. Let's look across asset allocation. Let's combine equity and fixed income to manage realized gains and losses across the asset allocation. So I think they're different, but I think both are progressing really quickly at the same time.
Agree, and I think I'd love to get Russ's take on this. But when you look at the larger enterprises, I think there's an expectation that they intend to build something centralized. But like, at what size firm are they going to look to lean on asset managers? Is it just the RIA channel? And how long does it take for them to get there? Is there some runway where this type of service can be provided by the asset manager? So, Russ, from your chair, obviously much larger enterprise type solution or institution. How are you guys looking at it from that perspective in terms of who should be delivering this personalization?
Yeah, Rob, I joked that if you asked me that question last year when I worked at Capital, I probably might have said something differently. But in reality, even when I was at Capital, I would say, hey, I think asset managers have an opportunity to fill a void while platforms continue to make investments to get to a place where they're able to kind of go do this. Again, we've trained our clients to think about, benchmarks, because it's important to us to say, hey, relatively, how are we doing versus an objective. But in reality, as clients only really care, are they able to meet that goal, that need, that want, that wish that they aspire to. And so, to me, the only best way to do that is to move this from a series of products to how do we deliver at a overall portfolio level. And I truly believe that's where the wealth managers need to kind of come in. But I also think about this too, and again, I don't mean to offend many on this call, but I might, which is some people truly have a unique secret sauce in terms of how to deliver personalization, especially tax management, right? There's a series of firms that are phenomenal in the direct indexing space. I think both Gavin and Patrick have talked about areas within kind of fixed income. But for most asset managers, this type of personalization isn't a core capability or competency, right? They're doing it as an accommodation until the wealth platforms are able to do it. And I would argue, I think many would actually be happy to focus on what they do well, which is, risk-adjusted return, strong security selection, and let the platforms do it. And if the platforms are doing it, I think it really frees up to deliver much better, client outcomes. As I mentioned earlier, if the platforms are doing it, we can look across sleeves and not just, again, solve for things within a single UMA construct, but think across the broader portfolio to be more thoughtful in tax management. So many times when I've talked to people in the direct indexing space, it's like, hey, I can't fully harvest that because in that sleeve, I'm taking too much active risk versus my benchmark. Well, if it's a $100,000 sleeve as part of $1 million portfolio, yeah, selling all of that Apple security at a 6% weight would add a lot of risk to that one sleeve, but the overall portfolio, no. And are we leaving opportunities to be even more personalized, more customized, more tax efficient on the table because we've set ourselves up to solve for kind of the needs of the asset manager versus putting the needs of the clients first. So I'm strongly in a belief, and it's where we're focused on. If you look at my business plan, it's like buzzword bingo. It says direct indexing. It says, personalization, customization, flexibility, tax management. It's really everything that we've talked about today, which really lines up to how do we better meet clients where they are? How do we more efficiently and repeatedly deliver upon these types of outcomes? And how do we free up times for financial advisors, right? Because this was a really big time-consuming part of their practice. How do we free that time up that can be redeployed? So I truly believe the differentiator is going to be less in terms of the asset management and more in terms of having a portfolio that aligns with that goal and deeply knowing those clients. That's a differentiator and one that I think people can capitalize on versus saying, hey, here's my way of relieving securities in a tax-efficient manner.
Great. Well, Gavin, go ahead. think you're on mute, Gavin. Oh, looks like we lost Gavin's audio. We'll give him a minute to get it straight. Okay.
I totally disagree with Gavin said.
Well, I do see a bunch of questions in the queue, and I know we have 15 minutes left, so I would like to close with just a really quick overview of your approach to personalization and the strategy that you're taking. Where do you see the biggest opportunities? And how you're going to accelerate growth? Using this approach, and what you intend to build in house versus kind of leveraging partners on in order to deliver a solution. If you could each hit on that a few minutes, that would be great. Pat, you want to kick us off? We'll check back on Gavin's audio in a second.
Yeah, sure. That's hopefully Gavin gets back on. Russ is absolutely right. We understand we're going to stay in our lane. We're going to thoughtfully construct portfolios. We're going to monitor for credit risk, look for relative value opportunities. We're going to give the client the ability to tailor around things like duration, security types, states. We're going to offer those tailoring mechanisms. But Russ is absolutely right. We're going to stick in our lanes. We're going to work with the platforms, understand their capability, be an advocate for their capabilities, and we're going to step in when it makes sense on things like event-driven transitions of portfolios. Have tools in the toolbox to be able to help in those unique circumstances. But we got to stick to our knitting as far as asset management is still asset management. So I think that's what our focus is on, and so I look forward to some questions.
Great. Ross, any thoughts there on your guys' strategy and approach?
So listen, I think our strategy approach is the client doesn't really care if we build it, buy it, or borrow it from others. So I think we are on a journey where we believe it's important to leverage industry-leading technology and software. We are partnering where we think we can leverage capabilities that we're building organically in-house. We're definitely doing that as well. But again, I think the key is that make it seamless for the client, make the experience easily digestible. It's like when you go to a restaurant, you don't really want to know how things are made. You just want to know that it tastes good, looks good, is a great experience. That's where we're focused. As I mentioned, our real focus right now is personalization like a model level. What excites me is going from a model platform where we have over $260 billion of model assets that is kind of a one-size-fits-most to fast forward in a few years. Every client could be unique. It's still a home office discretionary program, but we're going to customize every model based on what is important, unique to that client, whether it be a preference or in most cases a tax transition to come into it. And you think about direct indexing, right? Like no one direct indexing strategy looks the same, but they all have the same kind of risks. How do we apply that to other implementations? And the model portfolios feels like a great way to do it. And then again, getting into that seamless area, right? It's probably going to upset the people on the phone. Like we're not looking to add more direct indexing strategies. Our biggest fear is that that's blowing some of the centralized trading around UMA back to the old consults, fiduciary solutions, single manager, uncoordinated one at a time. So we're continuing to build those capabilities, and it's one that we need to get there as quickly as possible to be able that we are not shortchanging the experience while delivering it in-house.
Great. Kevin, any quick thoughts on strategy and approach before we turn to questions?
Yeah, sure. Hopefully my audio is working. I
good.
wanted to talk
Sounds
about
good.
technology. It's fun. I think the growth of the SMA industry and our sort of business plan is centered around creating a more digital interaction with the asset manager. So a more seamless experience for the advisor and the client as we help them understand the transition to SMA products, help them onboard and sort of realize the tax benefits of that transition, then an ongoing management protocol for that type of portfolio. The other thing that we're really excited about is multi-sleeve SMAs or UMAs that combine a variety of asset classes. There's things that we've been doing for the past few decades within our private client business to efficiently rebalance portfolios amongst asset classes through individual stock and bonds. And we think that's something that would be a unique capability to bring to the market. So those are the areas that we're really excited in investing in as a firm.
Great, thank you. So we do have a bunch of questions on here. Some of them, since the question was asked, we've actually addressed the topic to some degree. So I'll do my best to sift through here and talk about things we have not hit on. First question comes from Mark Price at UBS. How do you demonstrate the value added from personalization in client reporting and composites? Great topic. Any thoughts? I'll give that a jump ball. If anyone wants to jump in on that one.
I'll jump in, Rob. So we're working on it, obviously, on our direct indexing side. It's really table stakes to be able to articulate the value add via after-tax reporting. So we're doing that where it's permissible to provide those reports to clients. And we're working on leveraging that capability on the fixed income side to be able to articulate that on the fixed income side, most likely a 2024 initiative. And then I think we want to partner with the platforms again on, it's not typical in a single contract environment to be providing performance reports. So we want to be able to show those and offer those up for single contract clients. But I think that's, at least from my experience when I was on the wealth management side, that's somewhat new to offer performance reporting on single contract business. So I think that becomes a dialogue, between the asset manager and the platform. But I think folks are starting to look at that capability. The more we talk about taxes, the more we have to prove that it's working and it's additive.
Good. Anyone else on that topic? Because I have 3 or 4 questions that came in the queue around that, whether it's tax alpha, just the way you're going to report on it to show that value. Any thoughts from Russ or Gavin?
Yeah, I can chime in real quick. I would say, we're not really worried about, composites, right? That's an asset manager challenge. We're worried about how best to illustrate this to a client. So I think where we've seen the most early success is being able to show people to say, hey, here's your current situation, right? What are your short and long-term losses? Where are they coming from? What it would be like if we did nothing. We just kind of blindly put you into a kind of one-size-fits-most solution versus we're going to re-optimize the portfolio, create that unique snowflake for you and what that experience looks like coming into the portfolio and how we're going to manage that, over time. So I think that's where we've been able to show like some of the tangible benefits of saying you would have paid $60,000 in taxes if we just blindly did it, to either it's a reduced tax bill or in many scenarios no tax bill because we're customizing around those heavy tax positions. That adds a ton of value. I think we're going to continue to work on how do we show value in terms of the ongoing benefit, right? Like that tax alpha, that tax asset, or I think other than like a 1099 that can help bring home like that decision, because in many cases you are making some trade-off between investment alpha and tax alpha. How do we bring that home as we think about more customized distribution strategies? Again, showing how we're going to be looking at your other sources of income with your portfolio reliance and how you start making different decisions and use kind of different products. But the key part here is we can't just say trust me, right? We have to do show me. I think as an industry we are getting better, but we're early innings of a journey around building trust through showing clients what that experience will look like going in, what that experience has done throughout the course of the year, and then what the benefit has been at the end by doing it.
Great. Gavin, any thoughts on reporting before I move on to the next one?
Yeah, no, look, I agree with the other participants. I think quantification is 100% key here in demonstrating the value and why you would pay a manager or a platform to apply a tax overlay. So our industry has been, it's been sparse in terms of after-tax reporting. So one thing we've been doing is tax scorecards. It's not full after-tax reporting, but it can demonstrate the value of particular trades in your account and the deferral of a tax liability or the crystallization of a loss. I think there's some education that needs to go on in our industry too. I think some clients look at a tax loss harvesting program and think that the asset manager is manufacturing losses, right? And that's a bad thing. So I think sort of educating clients on how investment portfolios can at times generate losses and how you can use those effectively to rebalance the portfolio and enhance the after-tax return. I think it's just front to back about quantification. The other thing that I think is a game changer in our industry is the advent and the growth of the index ETF. That's a really good proxy for a return stream of a beta investor in an asset class that's super tax efficient. And I think to prove your worth in this industry with tax overlay or a tax managed SMA, you want to demonstrate value above and beyond that type of product. So I think after tax reporting on the account and on the benchmark is the ultimate solution. And I think agreement on standards and calculations behind that, which we won't get into on this call, are important. So as an industry, we need to come together and come up with some consistent ideas around how we present this to clients.
And Rob, one last thing on that. I know we kind of avoided since the first question that the topic of ESG, right? Because people typically don't buy ESG products, but we clearly know that they customize SMAs. It's how to report it in a way that really resonates with the client. We're not doing this, but I talked to a competitor that actually is building some of their ESG reporting, not just to show, hey, you're not owning these types of companies, but what is the impact of not owning those types of companies, right? How does your lack of exposure lead to not producing a certain negative outcome? That really, again, starts connecting clients on a more emotional level. Clients aren't thinking to themselves, I really don't want to own this company. They're saying, I really don't want to be involved in this outcome. So again, how do we help show the outcome and how that is truly leading to what is important to them? I think is this a great North Star for us to keep reminding ourselves on, bring this back to the client, put it in a way that actually is impactful for them and shows the value that their financial advisor is doing because they deeply understand what's unique and personal to them.
Great. Well, looking in here, there's a few other questions. Oh, so go ahead.
Yeah, sorry, Rob. Just wanted to comment on, Russ is absolutely right. As we look into the future on things like factor tilts and low vol and things like that, those client selections or FA selections that might be made, there is definitely a validation process that has to go on as to how was that, how did that affect the portfolio? We need to be transparent, at least with the advisor on those things. But yeah, it's a very interesting debate when you start to think about the more toggles, the more accountability you have for selection of the toggles and what the outcomes are.
There's a few questions in here about third-party providers. Matthew F. Carrion at Cerulli asks, who are the best third-party platforms that you think are best at tax management and customization? I know you guys are all, working on your solutions. Can you talk a little bit about what you've seen in the marketplace? Anybody stand out?
Rob, I think you can do some humble bragging if you want to maybe answer it from what you got, right? We work with you, so I guess it's a good endorsement that we value what you do.
There is a question in here about Vestmark's capabilities as well, and I know we're talking to all of you to some degree about solutions, so I will just say that Vestmark does have its new VAST offering, which is, of course, direct indexing, but also really a personalization platform that can empower wealth management firms or asset managers to deliver whatever you would like your ultimate product to look like. So a very flexible and scalable solution that's UMA enabled, has the ability to not only include indexes, but anything that can be delivered as a model. So a lot going on at Vestmark right now. We're very excited about it. And I'll spare all three of you mentioning exactly what we're talking about. Probably want to keep it to yourself anyway, but a little self-serving comment there. One last question I will throw out there. Does accommodating fractional shares need to be a priority for managers and platform providers? Is that something today? Is that something down the road? Do we not see that evolving? I know there's very few firms that support it today. Any thoughts on that?
Yeah, Rob, I hit on it earlier, and I'll just reiterate the point. It is not a necessity to do it. I think it will offer, broader accessibility to things like SMAs, especially when you're talking about, asset classes like small cap, right? You need a substantial portfolio to get access to SMAs in a small cap allocation. But I did also mention earlier just the kind of the unintended, impacts of fractional shares. To me, fractional shares helps with building a portfolio better to get access to it. while not as much of a problem today, clearly helped with high-priced securities that were very problematic in terms of getting more precise exposures. But there are the unintended consequences, which is, if all you have is a hammer, everything looks like a nail. I don't think every client, needs to. And Gavin, mentioned ETFs, right? Like for taxes, there are a lot of different ways to solve for it. And, financial advisors and wealth platforms need to have access to all those solutions and figure out what is the right solution to solve that unique client's problem without having unintended consequences like, a 40-plus page 1099 to deliver taxes.
Awesome. Well, I think we're actually at time. Sorry for the questions we didn't get to. A lot of them were redundant, so we did kill a few birds with a few stones. But Gavin, Pat, Russ, thank you so much. I'll turn it back to Joan to close.